Hey everyone, welcome back to Corporate Decoder, the place where we strip away the corporate jargon and get to the real story behind the filings. Today we're diving into Xponential's latest report, and let's just say there's a big shakeup happening in the fitness world. So what's the big news? Xponential, the company behind brands like CycleBar and Rumble, has just announced they're selling off these two popular fitness studio brands to a company called Extraordinary Brands, LLC. This is a pretty significant move, and it tells us a lot about where Xponential Fitness sees its future. Now, Xponential Fitness is a publicly traded company, which means they have to tell the Securities and Exchange Commission, or SEC, about important things that happen. This 8K filing is like a signal flare, letting everyone know about a material event that might affect investors, and selling off major brands, well, that's definitely a big deal. The filing confirms that this divestiture, which is a fancy word for selling off, happened on July 28, 2025. They issued a press release announcing this sale, and that press release is attached as an important exhibit to this filing. Think of exhibits as the supporting documents that prove the main story. Xponential 1C is listed on the New York Stock Exchange under the trading symbol XPOF. This means everyday people can buy and sell shares of the company, and that's why these filings are so crucial for keeping the market informed and fair. It's also interesting to note that Xponential Fitness is identifying itself as an emerging growth company. This is a classification for newer public companies that allows them some breathing room on certain regulatory requirements, like using extended transition periods for new accounting standards. It suggests they're still in a growth phase, but now they're also making strategic choices about which parts of their business to focus on. This section of the report is where they detail the other events that don't fit neatly into other categories. In this case, it's all about the CycleBar and Rumble divestiture. They're telling the world in no uncertain terms that these brands are no longer part of their core business. The press release itself, Exhibit 99.1, is where the company likely shared the official announcement to the public. We don't have the full text of that here, but its inclusion in this SEC filing means it's an officially recognized communication from the company. And then we have Exhibit 104, the cover page interactive data file, or AIX-BRL. This is a modern way for companies to file their reports in a way that's easier for computers to read and analyze, making data extraction and comparison much more efficient. It's like giving us a machine-readable summary of the entire filing. Finally, we see the signature block. John Manone, the Chief Financial Officer, has signed off on this report, confirming its accuracy and completeness on behalf of Xponential Fitness. This is the CFO stamp of approval saying, yes, this is what's happening. Now, looking at this filing, it's not a financial report like a 10Q or 10K, so there are no big numbers or tables to dissect here. But the story it tells is powerful. Selling off two major brands like CycleBar and Rumble signals a significant strategic shift for Xponential Fitness. They're simplifying their business, likely to focus resources on their remaining brands, or perhaps to streamline operations and improve profitability. This move could mean a few things for Xponential Fitness and its investors. On one hand, it could be a smart move to shed underperforming or non-core assets, allowing them to concentrate on what they do best. By divesting these brands, they might be aiming to reduce debt, improve cash flow, or invest more heavily in their areas of greater strength. It's like a chef deciding to focus on their signature dishes rather than trying to cook too many things at once. On the other hand, selling off brands that are well known in the fitness industry might raise questions about the overall health and direction of the company. Are these brands being sold because they weren't profitable enough, or is Xponential Fitness strategically repositioning itself for a different kind of growth? Without more financial detail from this specific filing, it's hard to say for sure, but the implication is that they're making a calculated decision to redefine their business. We'll have to keep an eye on future filings and announcements to see what Xponential Fitness does next. Will they acquire new brands, expand their existing ones, or focus purely on a leaner, more efficient operational model? This divestiture is clearly a turning point, and understanding the why behind it will be key for anyone following Xponential Fitness. What's your take on this strategic shift? Do you think selling CycleBar and Rumble is a smart move for Xponential Fitness, or does it signal underlying trouble? Let me know your thoughts in the comments below. If you found this breakdown helpful and want more straightforward explanations of complex corporate actions, make sure to hit that like button and subscribe to Corporate Decoder. And don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and I'll see you in the next video.